He's a managing partner. Hatem, good to have you on the show here. Your team owns Target, but not Walmart. So let's just start there, because Walmart earnings slipped, but then it's climbing back here. How can you prefer Target?
Good morning, Oliver. Thank you for having me. We've never liked Walmart, but they had a solid beat and raise this morning. Target has just been on a tear for the last 4 quarters. Apparel. When we were stuck at home, their e-commerce was doing really well. But now that people are coming out and doing things, and also they have a lot of cash and a lot of really money to spend, I think Target is really set to benefit from that.
So Target here has been clear the winner in the market, continuing to run. How much should we kind of rethink the way these companies are priced and valuations, history versus now? Because Target keeps getting more expensive, but I guess you could argue if the growth is better, it should be getting more expensive.
Yeah, I mean, Target is growing almost over 20% a year, which is kind of incredible. So that's why it's expensive. Frankly, everything is expensive in the market right now. And that's why I say Target more than Walmart, because at least the growth is there for Target to really justify some of these higher valuation. And also you got, the back to school, you got the fact that we have these child credit or stimulus that's coming in, so that's going to help with the spending. So there's a lot of kind of things that they're going for them, or with the consumer especially. And also, even if we get, more COVID bad news and people have to stay at home, the e-commerce side of Target will do well too.
Walmart's comps this past quarter were 5.2%. They said next quarter they expect 6 to 7. So I guess 2 parts of this analysis, and as we think about Target, is one, does Target need to put up better numbers than that on the top line? And 2, if they do, what is the standard here for leading into a rally? Like if Walmart's little change today, 50 basis points, it's positive, even as they expect increasing comp sales. That's a pretty tough bar, it seems. It's been priced in. What do you think Target has now in terms of expectations priced into its move?
Yeah, expectations are pretty high for both, right? I think that's why you saw Walmart stock not do too well this morning. It's coming back a bit, but the expectations are super high. So they have to beat, they have to raise, they have to say that growth will continue. Hopefully, same-store sales will increase. Hopefully, more traffic. Again, if we have issues with COVID and you have less traffic in stores, that may be an issue, and people may shun the stock as a result. But ultimately, I think if you look at Walmart numbers, you can only expect that Target will do even better.
Hatem, what is the role, as you mentioned? I think a really important thing here we can't lose sight of is the stimulus still working its way through this economy. Child tax credits have been hitting over the last month, so there's still some liquidity making its way into homes from the government. Do you think that these companies and businesses need more of that type of liquidity being injected? How do we assess after the last year what should be standard and what needs to keep coming to keep this trade going?
Yeah, we can't really deny that a lot of these retailers have been going because of all the stimulus from the government and the Fed. Now everyone is worried that that's going to stop at some point, which it has to. But we still have these child credits coming in, and frankly, that's where they're going to be spent. Walmart, Target, back to school, stuff like that. So I think we can count on that. But eventually, the economy has to pick up, and obviously revenues or at least earnings have to go up for the consumer to keep going, basically.